In this video, I'm going to show you how you can buy the S&P 500 using Trading 212. Now, I already have a video that explains the different types of S&P 500 funds for UK investors. However, I feel like that is too detailed for beginners. So this video is for you beginners out there who literally have just probably downloaded the Trading 212 app. Now, if you haven't already downloaded the Trading 212 app, you can always use the link in my description box down below, and after you do that and top up your account with just £1, you will receive a free share worth up to £100. Alternatively, if you've signed up to Trading 212 within the past 10 days and haven't received your free share, then all you have to do is to go into the menu button by pressing the 3 horizontal lines here, and then just scroll all the way down and you will see this section called use promo code, and you press that, and then you can use the code JUBAIR. After you apply that, you should receive a free share in your Trading 212 Invest account. Now, for you beginners out there, after you've signed up for Trading 212, filled in all your details, you will be presented with a screen that looks like this. Maybe not exactly, as I already have some investments, as you can see here. Now, as a beginner investor, you probably have heard that the S&P 500 is a very good investment for long-term investors, and you just want to get started, getting into the S&P 500, but you're still confused because there are a lot of options, especially on Trading 212. Now, the reason why I use Trading 212 is because it is one of the easiest platforms to use, but not just that. When it comes to, UK-based ETFs, such as the S&P 500, that is denominated in pounds, so you can buy it in pounds, there are no fees, so there's no commission, there's no trading fees, there's no selling fees, no buying fees, nothing like that. So it is one of the best platforms to actually get very low fee, low cost purchases of the S&P 500. Now, bear in mind, I am going to explain that there are some fees associated with the S&P 500. That is because the fund that provides the S&P 500, they're going to charge something, because keeping a fund alive is not a cheap thing. But the thing that you will notice is that you never actually have to pay for this fee. This fee is taken out of the fund. This is called a fund management fee or a total expense ratio, or sometimes called other things. So you will actually never see this fee coming out yourself. The price that the fund is will reflect the fees, and the fees typically are incredibly low, so there's nothing to worry about here. So in order to start getting invested with Trading 212, first of all, you're going to be wanting to head over to this menu button down here, which has the magnifying glass, and just press into that. Now, within it, you can see a whole bunch of stocks. And as a beginner, you should know that a stock is basically a publicly listed company. Here are some examples: Nvidia, Nike, Tesla, Apple, so on and so forth. And what the S&P 500 is a collection of the top 500 companies, such as I am showing here, but within a basket called an exchange traded fund. Now, when you hear of the S&P 500, what people are really talking about most of the time are exchange traded funds of the top 500 publicly listed companies, which is commonly called the S&P 500. Now, you can scroll down here and then go into most popular ETFs, and as you can see, the first one is in the S&P 500. But of course, if you keep scrolling, you will see that there are also derivatives of the S&P 500 that might confuse you as a beginner investor. So what we're going to do instead is go into the search bar and type in SP 500, and there are a bunch of ETFs that comes up. Now, in this video, because it's actually focused on beginners, I'm going to quickly go through some of the most common S&P 500 funds and how you can buy into them. So the most common by far is the S&P 500 by Vanguard, which is also called VUSA. I'll go into it and explain a bit more about that. So as a beginner, you will know that every single stock or ETF has a 4-digit code, most of the time being 4 characters long. Sometimes it can be 5 characters, sometimes it can be 3, called the VUSA. Now, this is what they call a ticker code, and the ticker code will be unique to each fund. So as long as you remember the ticker code, you can go back into it and invest in it later along in your journey. Now, the name of the fund or the ETF is here. So the Vanguard S&P 500 DIST. Now, DIST basically means that this is a distributing fund, which means that, some companies in the S&P 500, when you hold them, they pay out a dividend. And these dividends are also paid out to people that own the basket of stocks, otherwise called the ETF. Now, because you own shares in the ETF, you also own very, very small amounts of shares in these actual companies. You actually become a shareholder, and when these dividends are given out, they are given out to you also 4 times a year, so every quarter, for holding shares in this Vanguard S&P 500. Now, if you wanted your fund to reinvest these dividends automatically, you can go back here and you can go to the second option, which is the Vanguard S&P 500 ACC. So this has the ticker code VUAG, so it's separate from the VUSA. UK. So this is an accumulating fund, or ACC in brackets for short. What this does is the fund actually reinvests those dividends back into the fund. And what this does is it allows the fund to keep growing as the dividends are compounded on top of all the companies becoming bigger and bigger, more profitable, and essentially the value of this S&P 500 index goes up as a function of time. As you can see, since 2020, the S&P 500 has kept going up, even though there were periods of times when the S&P 500 dropped. As you can see, on April 22, it dropped down all the way here. As you can see, in the short term, there will always be fluctuations. As you can see, here is the last day the stock market was open. You can see it goes up and down quite a bit, but in the long term, typically we see the S&P 500 is technically a good investment because over the past 100 plus years, it has given investors a good return over the long period. We're talking about 10, 20, 30, 40 years time. Now, this is why people can only really recommend that you invest for the long term, because in the short term, if you put your money only for 1 week, 1 day, 1 month, you can lose more money that you put in because there are fluctuations in the market. So let's just say we chose the VUSA for our S&P 500 fund. All we have to do now is just press buy here, and trading 212 has a few options. So the first one, as you can see here, is called the market order. Now, markets open in the UK between 8 in the morning and 4:30 p.m. So right now I am filming on a Saturday, so the markets are closed. When the markets are open, as you can see, this is the last day the market was open on the Friday. The price of the fund goes up and down. This is very normal, just like any other market that is selling the same thing worldwide. You would expect that some people are paying more and some people are paying less for the same thing. This is exactly the same with an ETF, an exchange traded fund. So it is a fund that can be exchanged just like a stock. So it behaves like just a single stock, but instead of getting actually one stock inside that stock, you're getting around 500, and that increases the diversification. So instead of investing, let's say, in Tesla, and if Tesla went bust, you will lose all your money, it is very unlikely that you will lose all your money with the S&P 500 because there will be over another 499 plus companies willing to take up that slack and increase the value over a period of time. So when you go into market order, you can buy however many shares you want. The good thing about trading 212, another positive about it, is that even if you don't have the complete amount of money to buy a whole share, as you can see, one share will cost us around £83. Even if we wanted to buy less, let's say we wanted to buy a fraction of that, 0.1 shares, we can buy with just £8.25, and we will get 0.1 shares. Of course, when it comes to buying on the market, the prices fluctuate all the time. This is why it is approximated that it will be £8.25. Realistically, it could be more or less because the markets change pretty much every second. Now, if the market was open, we can just press review order and just check all the details. A number of shares, 0.1. This will take around £8.25. And of course, the best thing about trading 212 is that there is absolutely no commission, especially no additional fees on ETFs that are actually denominated in pounds. As you can see, the VUSA is actually in pounds. Now, alternatively, if you don't want to do it like this and instead you know how much money you want to spend, you can change from here number of shares to the value here. Now, what this allows you to do is to put in however much money you want, starting with as little as £1. So if we just wanted to invest £1, let's say we weren't comfortable with investing and we wanted to dip our toes into investing into the S&P 500, we can put in £1 here, review order here, and then press send by order. Now, as you can see, because the markets are closed, this comes out as a pending order of £1, and as soon as the markets open and your order can be fulfilled, you will buy £1 worth into the S&P 500. Now, there may be questions as to, is it worth just investing in £1? And of course, it is worth it because it begins your journey into investing. And if you invest consistently, you will realize the power of compound interest and regular investing. So yes, even as little as £1 actually will help you. I know that anyone who wants to start, the first £1 is literally the toughest thing to do. So I'm all for starting with as little as £1. Obviously, if you improve your monthly contribution and you let your investments compound over time, in 40 years, the compounding return becomes absolutely unbelievable. It becomes very hard for humans to actually visualize what this will be worth over 40 years. But of course, even with £1 over 40 years, you're not going to get that much compound interest. And so it is in your best interest to invest as much money as you can. But of course, like I always say in the short term there will be fluctuations. So if you need that money, please, please, please don't put it into the stock market. Although these videos are never financial advice anyway, I'm just showing you how you could buy into the S&P 500. Now, if for some reason you really didn't like Vanguard, there are also other options down here. As you can see, you can actually get the iShares Core S&P 500, which is basically tracking the same index, but it's from a different fund manager, and this time it is iShares. Now, as a beginner, you do have to realize that some funds are not denominated in pounds, so it won't actually be in your best interest to actually buy it in a different currency if you are investing in the UK. For example, if I want to buy this fund, I'm going to have to convert my money from pounds to dollars, and there is a foreign exchange fee on Trading 212 of 0.5%, and I know other brokers charge a lot more than this. Trading 212 is one of the lowest here. So remember to do your research, to go for a fund that you have done your research on that is compatible with your lifestyle and also denominated in the local currency. So if you are in the UK, it's going to have to be pounds. So this is the one that you probably would go for if you wanted iShares, which is the iShares Core S&P 500 GSPX. This is one that I regularly invest in. Now, there is a difference in this one compared to the VUSA. This one is a hedged ETF. Now, I'm going to keep this simple for beginners. This one costs a little bit more. It costs 0.1% of an annual fee. Now, the VUSA that we just saw costs 0.07%, so it's around 30% higher. And what this does is the currency fluctuation between the pound and the dollar. This is stabilized, so essentially you're getting closer to what the American S&P 500 is getting in terms of your pounds. And the same thing will apply if you want to buy it. Don't take this too much into consideration what the actual price of the S&P 500 is. The percentage change is the thing that you care most about, not how much the fund costs. So if something goes up by 10% in a fund that costs £900 or a fund that costs £9, you're going to get the same return, but the value will just look different. So if you wanted to get something similar to the Vanguard USA with iShares, it will be the IUSA here, the iShares Core S&P 500, which is also a distributing fund. Now here you can see this is given in pence, so pence sterling. So basically this means around £43. If we scroll down, you can see the expense ratio is the same. So the fee is the same as the Vanguard USA. And there is a bit more information about the fund. So for example, the dividend yield is around 1.54%, and this is given out every 3 months. Now, if you wanted to, as a beginner, learn more about what kind of investments you are holding when investing into the S&P 500, you can see here by top 10 holdings, these are in Apple, Microsoft, Amazon, Nvidia, Alphabet, Meta, which is formerly known as Facebook, Tesla, Alphabet, Berkshire Hathaway, and Broadcom. If you want to go into the sectors, you can see that this is mostly technology, then financials, healthcare, so on and so forth. And in terms of regions, we expect this to be predominantly in the USA because of course this is the S&P 500. But if you wanted to find more about the fund, you can do this via this app or any other app. But if you wanted to buy into it, you can just press buy here. Either see how much money you want to put in into pounds, or you can change this and then see how many number of shares you want. As you can see, one share will set you back 4,333 pence or £43.34. And lastly, even if you hated for some reason Vanguard and iShares, there is Investco, so you can go into this fund here. This has the ticker code SPXP, and again it is in pounds, 85,217 pence, which is £852. And again, if you wanted to buy into it, you can press buy here, put in how much you want. So if you want one share, it's going to cost you £852. Or if you want to change this to value and you only want to put in £1, you can change this to pound here. And again, that's going to only give you a tiny amount of shares because the actual share value is very high. So make sure to check out some of my other videos, and I will see you in the next video.